Good day everyone, hope you are well. Today's video is going to be a little bit different than all the other videos that I make. Today I'm going to look at Nas100, only staying on the 1 minute. It's a really easy strategy you can follow. Yes, there won't be a trade every single day, but at least you can get some trades if you don't know your daily bias and so forth. It all comes down to your risk management. As you can see, our target is going to be minimum 1-to-1 risk to reward. If you like my content, please go like and subscribe, put on the bell notifications, and let's get straight into this video. Alright, so in this video, we are going to look at a few things that we need to take in consideration before we take a trade. We need to look for a liquidity sweep. We need to look for market structure shift. We need to look for a fair value gap that we're going to enter from, and our target is going to be minimum 1-to-1 risk to reward trades. Alright, so let's quickly break it down. So the time frame that we are going to enter from is going to be the 10 a.m. session New York time. 10 a.m. New York time. If you don't know where to change your time, you can just come click here, find New York and put your charts on New York, and then the 10 a.m. session is the one we are going to trade. You can also just make a note for you, just like this, just to put a line there. Alright, so we are trading from the 10 a.m. session. Okay, so let's get straight into it. So the first thing you want to do for this strategy to make it a little bit easier for yourself, I want you to go to indicators, just type in fractals, William fractals, and it will be on your chart. Go to the settings, just make it around 5, 6. Okay, and as you can see, there we go. All right, so we are going to use these fractals. Now a fractal shows you the highs and the lows, fractal highs and fractal lows. So if you're going to put the setting like for 2, it's going to show you a high and low on every single one. We don't want that. We just want to make it a little bit more simpler. All right, so for this strategy, we need to look for a liquidity sweep. So as you can see, market made a low, high, low. There's also a high, low, high, low, highs. All right, now let's quickly have a look. So we're only going to take trades from 10 a.m. in the morning, New York time. So what did market do? Market made a low, high, a new low, a new high. This high did not break this high. So as you can see, liquidity was created here. The reason why I took this liquidity point, if you zoom in, you will also see that's also a fractal high. The reason the indicator is not showing it is because, remember, we changed the settings to 6. You will see now why I say we need to change the settings to 6. Otherwise, you're going to get too confused. But bear in mind, you can also just see, all right, high lows, high lows. Now let's quickly see what happens. All right, so liquidity was swept. Now this is the important part. Now the market structure shift that I'm looking for is going to be by the fractal market structure shift, where the indicator is going to show you the low. So that's where I'm going to mark out my market structure shift. So we have a liquidity sweep, we have a market structure shift. Now we enter from a fair value gap. So as soon as we broke this low here, where is the first fair value gap? It's going to be this one here. As you can see, price came to our fair value gap, tapped us in. We're going to put our stop loss. You can put it there. It's a little bit too big. In this case, just put it above this order block and this fair value gap here. A little bit breathing room. Our minimum is going to be a 1-to-1. That's going to be there. or you can target the next fractal low. I like to target minimum 1.5, 2 risk to reward. Let's keep it at 2 risk to reward. This is going to be up to you. When your trade goes to 1 to 1, you can put your stops to break even. All right, so we had our liquidity sweep, market structure shift, enter from a fair value gap, and target your trade. All right, let's go to the next session. All right, so here we are at the next session. Let's mark out the 10 o'clock. So we're going to start trading from 10 o'clock. As you can see, so we need to wait for the liquidity sweep and the market structure shift. So 10 o'clock came, we had high, low, high, low, high, low, high, low, high, low, high. Okay, now look what happened here. We were in a downtrend, all right? So we saw price made a new low. So in order to validate this as a market structure shift, we want this high to be broken, correct? We want this high to be broken. Okay, so let's have a look. Market came. Market is on a up move. It broke this high. Let's look back. Did market take liquidity? Yes, market took liquidity down there. Did we break this high? Yes, we did. As you can see, this candle broke through this high. So that validates my market structure shift. Where's the closest fair value gap? That one there. As you can see, price broke, created a fair value gap. Immediately enter from the fair value gap. You can put your stops below this order block and this fractal low here. And minimum target 1 to 1. So when the trade is there, I will put my stops to break even. And then I would take some partials maybe at 1.5, or you can target 1 to 2 risk to reward trade. And there again, liquidity sweep, market structure shift, fair value gap, enter, in and out of the trade. All right, let's go to the next session. All right, so here we are at the next session. So let's mark out 10 o'clock. So we're going to take trades from here. So let's quickly see what happens here. We got high, low, high, low, highs, and lows. Now, when we look at the bigger picture, this is going to be my highs. These are going to be my lows. Okay, so price broke that high. So we're waiting for this low to be validated, to be broken. This low to be broken. So there was a liquidity sweep. We're waiting for this low to be broken. We broke it here. Where's the closest fair value gap? It's there. Enter the trade. Stops above this order block there. And as you can see, we got stopped out. So that's a losing trade for the day. So it's out of the 3 trades, 1 losing trade. Let's go to the next session. All right, so let's look at the next session. So 10 o'clock is there. We got our highs and our lows. So high, low. So this is the highest point, lowest point here in this leg. As you can see, everything between this high and low is internal market structure. So we need to wait for either this high or this low to be broken. As you can see, we broke this high there. So to validate market structure shift, we want this low to be broken. So liquidity sweep, market structure shift. Where's our fair value gap? The stop loss above that high in order block. we target at least a 1-to-1. As you can see, we were a little bit in profit. We never broke this low and we got stopped out. So another losing trade. All right, so we are at the next session now. Let's quickly have a look. So 10 o'clock starts there. There we go. 10 o'clock starts there. So let's see what happened before 10 o'clock. We had our high, low, high, low, high, low, high, lows. So when we look here at the bigger picture, as you can see, we created this low, high, low, highs, low, highs. Here, liquidity was swept before 10. This high was created. This low was created. So everything in this leg is going to be internal structure. We broke this low, market structure shift. Liquidity, market structure shift. When this broke market structure shift, what did market leave behind? Market left a fair value gap behind. And as you can see, we entered, here's our 10 o'clock. 10 o'clock started, traded straight into the fair value gap in our trading zone. And we took a short position there at stop loss above this order block and fair value gap, this high. Minimum target is 1-to-1. There I will put my stop loss to break even. And then you can target a 1.5, take some partials. And then also you can target a 1-to-2 and take some partials. Beautiful trade. By just following liquidity sweeps, market structure shift, look at the fractals. The reason why I use these fractals is to make it a little bit easier for you to identify highs and lows. For this strategy, I like to make the market structure shift a valid fractal high or low. Huge impulse move, enter from the fair value gap and straight to your target. All right. I hope you found this video informative. If you have any questions, please leave a comment below. I will answer them for you. And yes, this is an easy strategy you can use under 1 minute. There is a lot more in depth you can go, but I think for a beginner or so, this is a nice strategy to get into the market. I will make some more videos on NASDAQ as well, going a little bit more in detail on how you can trade NASDAQ, going from a top-down analysis as well. All right, thanks everyone. See you in the next video. Bye.